Hey everyone, happy Monday. Welcome back to my channel. I'm Caitlin McKegg. I am a real estate broker here in Phoenix, Arizona, and I do these Monday market updates every Monday. And I appreciate you joining me. Today, we're going to talk about the economy. We're going to talk about what's going on in the Phoenix real estate market and what the stat is that is the lowest since 2009. Kind of crazy, makes sense, but it's just wild to think that we are in this place. So let's jump right in. First of all, if you're new, hit the subscribe button. I'm here every Monday. And if you guys want to learn more about my life outside of just real estate and see what I do every day, check me out at Instagram at Your Phoenix Real Estate Agent. So let's jump in. Let me take my name off here, all of this stuff. All right, we're starting with CPI. Okay, so October CPI may solidify a case for a terminal rate above 5%. So new CPI numbers, we'll have those on Thursday. They're anticipating about 7.9% for October, which is a moderation from September. And the core CPI, we've had kind of little change. We're anticipating little change with that. And that is around 6.5%, little change from 6.6. So that's what's being anticipated. We'll know more about that this Thursday. And last week, we actually had the Fed meet. They raised the interest rate by 75 basis points. That was to be expected. And we also got jobs reports or jobs numbers. And so that was kind of interesting. The US economy added 261,000 jobs in October. It was a pretty robust report. So it's kind of good news, bad news. Good thing that the labor market is still strong. Bad news because it just gives the Fed more of a reason to continue to raise the interest rate and tighten and really try to bring the economy to a slower pace so that we can tame inflation. So regardless of this report, we're still seeing a lot of layoffs. We're hearing a lot about that in tech. I'm hearing a lot of different industries doing kind of large layoffs. So this will probably continue. I think the jobs report will definitely soften as we continue over the next few months. But for now, it's still looking fairly strong. We did actually have an increase in the unemployment rate. I'm going to talk about that in a second. But overall, that's kind of what happened last week. So Fed had their meeting, raised the interest rate. We also had the jobs report come out. And with all of that, the markets reacted and mortgage interest rates actually went up last week. So not a great week for mortgage rates, but we don't really have a whole lot of incentive for those rates to go down right now. So that's just kind of where we're at. So talking about employment and this jobs report just a little bit, the strong labor report, like I said, suggests a series of rate hikes has not really had its impact yet, or if it has, it's very lagging. So at this point, we're not seeing much of a change in the job market, still going pretty strong. Like I said, we did have an increase in the unemployment rate. It rose to 3.7% from 3.5%. Not a huge change. We still added a lot of jobs. So it's nothing drastic, but it is a lower number of jobs added than September. So we are seeing a little bit of a change there. What they're saying in this article is the bottom line here, the labor market is softening, but has yet reached the point where the data is screaming for the Fed to stop tightening. And one of the things Jerome Powell was saying last week is that he will continue to work towards taming inflation. We're not expected to see any sort of pivot in what they're doing. We're actually probably going to see continued rate hikes, and we have a higher terminal rate that they're trying to reach of 5% now. So that was Jerome Powell's message last week. So we're just going to continue to see more and more of this slowing the economy down. Again, I've talked about this before. Is this a lagging effect on the economy? Yeah, everything they're doing now, we're probably going to start to feel a pretty big halt with all of this in, 3 to 6 months. And we're certainly feeling it in the housing market already. Things have been very slow. And I'm going to talk more about that in a second, specifically for Phoenix. Again, I'm not looking at housing from a national standpoint. So I don't know, different markets have different reactions, but for Phoenix right now, we're certainly feeling these changes coming through. So we're going to move on. Let's talk about real estate. Let's talk about Phoenix. And we're going to start with our CMI. If you're new here, the CMI is the Cromford Market Index. So I am a subscriber to the Cromford Report. They do a lot of data research in the MLS to give us great information of what's going on in the market. And one of the things they have is the Cromford Market Index, which looks at supply and demand in our market and helps us understand where prices are headed based on supply and demand. And so what I have here on the screen is a kind of their algorithm and the guide for which these numbers or what these numbers mean. So anywhere between 90 to 110 is considered a balanced market. Any number of over 110 is a seller's market. Any number below 90 is a buyer's market. Today, we're sitting at 92.2. This is a pretty big change from last week. We were either at 94 or 96. I should have double checked, but either way, we were not moving off of like 102 for quite a while and very, very small fluctuations. And over the last 3 to 4 weeks, this has definitely moved quite a bit downwards. And so we're still technically in balance throughout all of the Phoenix market. However, we're quickly moving away from that and into a buyer's market. Demand continues to fall. So 76.2 means that we're 24% below normal for demand. And our supply is still below normal as well at 82.6. So that's about 18% below normal. So we are in a situation where supply is still pretty low, but our demand is lower than our supply. And therefore, that is moving us into a buyer's market. That is putting us in a position where sellers don't have the upper hand in this market and therefore can't command the prices that they used to. And so we see a softening in prices, and that's what's happening right now. This situation that we have here is by no means a crash. Now, whether or not things could change in the future, I don't know. But right now, we're fairly stable, just kind of tipping into this buyer's market with our lack of demand. And that's going to continue as we go into the holidays. This is not traditionally a fast time for real estate. The number of transactions always goes down this time of year. So what we already have going on combined with the seasonality, we're going to see a slowdown in sales, and we're likely going to see a stabilization of prices just because there's not going to be enough activity to make a big change. We're not going to see a lot of new listings come to market unless people have to sell. You don't want to list your house during the holidays. So that's my prediction for the end of the year. We're going to kind of keep this stability, but our demand will continue to fall off. So supply will stay normal, demand will fall off. And for that, the entire CMI will probably continue to go down. I expect next week for us to be in a buyer's market overall. Now, this is all of Phoenix Metro, but every city performs differently. So let's look at this number by city and scroll down here. So here's all the major 17 cities that we have throughout the Phoenix area. And you can see their respective CMIs. You can see the change over the last month and where they stood last month. Now, the average monthly change for all of the CMIs over the last month was 10%. And that is compared to the 8%, 8.8% that we saw the month before. Sorry, I know I'm blocking this. I'm going to take this off. So a 10% change over the last month. Last week, we were looking at an 8% change over the last month. So clearly there's been some acceleration towards a buyer's market with all of these cities. Paradise Valley had the biggest change with a 34% drop month over month in their CMI. They were much stronger at 174 last month compared to the 116. And Cave Creek, Avondale, Mesa, Chandler, Maricopa all fell more than 12%. So they had pretty large changes as well. The Northeast Valley continues to be the strongest areas, still hanging out in a seller's market. These are our only 3 sellers markets left, although they're barely hanging on. But if you're looking for a home in Fountain Hills, Scottsdale, or Paradise Valley as a buyer, you just don't have as much wiggle room and leverage as you do in other areas of the valley. The Northeast Valley is still staying fairly strong. So just keep that in mind. Buying there versus buying somewhere like Queen Creek, you have much more leverage as a buyer. So different cities are acting differently, right? Now, we also have 12 cities that are currently buyers markets. We only have 2 that are balanced, and then we have our 3 that are sellers markets. Cave Creek and Phoenix are the 2 balanced markets. Everything else is officially in a buyer's market. So take that as you will. Now let's talk about these stats. What number is the lowest since 2009? It's actually our number of transactions in October. And I know as a consumer, that may not mean as much to you, but what it tells you is that things have slowed down significantly. And so if you are either thinking of buying or selling, you need to know that there is a much less activity going on out there on both sides than there was months before or anytime, earlier this year. So that's a pretty interesting stat. I'm going to take this off the screen and I'm just going to show you some numbers here instead of, I don't have any graphs on these. So we're going to talk about the difference in what's going on this past October, now that we've finished the month, compared to October of 2021, because we've seen some pretty big changes. So in terms of closed transactions, we're down 42% since October of 2021. We only had 6,019 closed sales in October. So it's a pretty low number. Like I said, this is the lowest since January of 2009. That's specifically for resale closings, but that is a pretty low number that we're seeing. Now, when we look at new homes, those closings totaled 1,410. That's actually up 4% from October of 2021. What I think with these new home sales, these numbers can be a little bit misleading because obviously people are under contract for a year sometimes with a new build. So as long as folks aren't canceling on these, we're certainly going to see a stronger market in new homes because people have been locked in for a longer time. Now, if we look at the resale closings, that's 4,609. That is down 49% from October of 2021. So we had half the sales this October as compared to last October when you look at resale homes, which is the bulk of our market. So everyone's feeling this in the real estate industry, from realtors to title to escrow to inspectors to lenders. And again, as a consumer, just knowing that there's much less activity out there right now. The median sales price was $470,000 this October. It's actually up 11.2% from October of 2021. I know that sounds weird, but we still haven't fallen that much to where we're below last year's prices. We have had a change, and I'll talk about that right now. Resale homes are about 8.1%, down 8.1% since May. So we're up 11% from last year, but down 8% since May. So what does that tell us? That gap is closing, and sooner than later, if things continue in this direction, we will have lower month-over-month prices. And then if we look at the new home sales pricing, it was $529,148 as the median. That's up 18.3% since October of 2021. So new home sales numbers or sales prices are up for new homes by 18% as compared to resales, which was only 11%. And the median resale home, the last stat, 11%, that was for all together. This is for resale. 6.5% from October of 2021. So still it's up less significantly from the new home sales prices. So that's what we have going on in the market. Much fewer transactions, softening prices, more supply than demand by just a little bit, and demand continuing to fall because these interest rates are making it very challenging for buyers and somewhat unaffordable. So if you have questions about what's going on in the Phoenix market, check the description below. There's a link to contact me. You can also find my contact information there or request an instant home valuation, search my MLS, all the good stuff. So make sure to check that out. Hit subscribe. I will see you next week on another Monday market update. Thanks for joining me, guys. Sorry I couldn't do live this week, but hopefully next week I will be back live. Have a great day.